Hello, fellow traders. 'Tis I, the Rumpled One. It's Saturday, February 4th, 2017. I want to talk to you about black belt trading. I talked about it years ago, or posted about it, I guess I should say, to be a little more accurate. But I was talking to some of my trading buddies yesterday on the phone, and they're all over the country. California, Maine, Texas, just all over. But, one question or one, I don't know, complaint, maybe observation people make is like, hey, you tell us that all you need is a horizontal line, but you come up with all these indicators. And so what they're saying is that they see that maybe there's something that's not consistent. Well, if you think about it, somebody that's attained a black belt has mastered more than one kick and more than one punch. Because I don't think they would want to go into a competition and only have one kick or one punch. Now, of course, in trading, you only need one technique that's profitable that you can basically milk every day. I mean, like my milk the cows strategy or technique in the stock market. Because price is going to range, and it's going to range up and down from the open. So if you buy somewhere near the open, it's either going to go up or down from there. And if you're on the right side of the trade, chances are you're going to make money. I mean, it's kind of like you can't not make money if you're on the right side of the trade. The problem is for some people is getting on the right side of the trade. And that's part of the reason why I write many different indicators. So, and then I got to talking with a guy, a trader, and I was showing him something about the midpoint. We were looking at a trade yesterday, and it was the euro yen. It was, if I remember correctly, there was about 2 hours left in the day. And the euro yen had a green daily candle, and it was right at the midpoint. And he was thinking about going long. And I said, I'm not going to go long there. I want to go short. He's like, well, why? I go, well, it's in the red rat zone. If I remember correctly, it was 16 pips off the high. Well, long story short, it dropped, and he went short, and he bagged, I think, about 30 pips. So the point I'm trying to make with all this is that you only need one strategy, but when you're in competition, you might need more than one technique. You might need to look at things in different ways. You might have that one entry, but you might look at other things that tell you, hey, don't take that trade, or possibly you should be taking that trade the other way. So let's just go ahead and look at something here. Now, if I remember correctly, it was the euro yen. So let's put the euro yen up. Oh, and by the way, I updated that buttons indicator. I made a buttons SWTRO modified version, so you can put it down here in a separate window so it doesn't step on the candles. And I uploaded it where I post my codes. You guys can go find it. So here's EJ, and here's that midpoint right there, 121.61. Okay, and so you can see it has dropped right there. Now, you really can't tell much looking at this daily candle, so let's drop it down to H1. Okay? Now, right here, these are the mid dots from the TRO mid dots indicator. And you can see 121.61. That's the midpoint. Okay? And so, as I was saying, there was about 2 hours left in the market, and this is where the trade was. And so right here, you can see it went up, but it didn't break that high. You see that? It did not break that high. So basically what it did was, and this is where the black belt comes in. let's look at this. We already know that it was in the upper rat zone because it was about 16 pips off the daily high. So that's one thing we know. Next thing we know is it's in this candle's upper wick zone right here. Now we know price does not like to stay in the wick zone. If you don't know that, there's a few wick zone videos out there where I go through the frequency distributions. So now we know price doesn't want to stay in the wick zone, and since it didn't, it went up, but now it's coming back down. So we say, okay, that's two reasons to go short. Now, at this particular point, it's still in the upper wick zone, but it's dropping. And right here, you can see it drop below this candle's high right here. It dropped below there. So this candle did not hold the middle. This candle did not hold the middle. This candle did not make a high, and it's dropping. So right here at that daily midpoint, that's where you go short. Because the daily midpoint is a very, very, very interesting place to trade. Actually, it's let me be a little more precise. This is the previous day's midpoint. These aqua colored dots here, this is the current days. So let me just switch back here to D1. So you see these aqua dots, that's the current days, or in this case, this candle's midpoint. And you can see here, when it comes to the new candle, it changes to the magenta color. Okay, that's previous. So that's the previous. This is the current. So we can go back over to H1. And so right here, this H1 candle, you take that short, this is what happens. It comes all the way through this candle's body, gets into this candle's wick zone, exits that candle's wick zone. So right there, so by using more than one method or technique, that even though we might be focused on the midpoint trade, we look at these other things to give us an idea. Should we take the trade or not? Because if this were down here, okay, if this was outside of the rat zone, I might not want to take that trade. Because if it's outside the rat zone and I'm looking for a reversal, that's lowering my odds. So I might say, if it's not in the rat zone, I'm not interested in taking that trade. I'll wait for it to go in the rat zone. That's simple. So that's what I mean about black belt, where you're going to combine these different methods and techniques as an analysis whether or not to enter the trade. But the actual trade is basically, you're just going to be taking the trade when the price crosses this horizontal line. Now, I've got the TRO HL5 indicator loaded up here, and here's the previous day's midpoint, and this is the current day's. And let us switch over to the Euro Yen so we can look at it this way. So once again, we're just going to take the trade at this horizontal line. That's it. Real simple. That's all we're doing. We're trading at the horizontal line. Now, like I said right here, if you took this trade at this point, you would be going against that candle color. So that's one that's saying, well, you should go long. Okay, so in other words, when it first opened and it first went up, if you went long, okay, but now it stopped short of the high, came back down, it's in this wick zone, it's entering this wick zone, so it cut through here. So that's a couple of reasons to say, if I'm long, I might want to exit this trade, and I might want to go short. Now, of course, there's going to be those who watch this video and say it's hindsight. But you know what? I really don't care. Because I know what happened. My friend knows what happened. And I'm just sharing to you these ideas. So for those of you who are the naysayers, the TRO haters, or whatever you want to call yourselves, you know, if you want to put, nasty comments out there on YouTube or other trading forums about me, well, you have at it. I'm just going to laugh at you. So anyway, you can see what happens here. So if you go back, and if we put this on the daily chart, you can see the action around the previous day's midpoint. So right here, it didn't quite make it. It rejected it. Didn't quite make it. Here, it blasted through it. Here, it went down, came back to it. Right here, blasted through it. Didn't quite make it. It opened above and just took off. So using that previous candle or previous day's midpoint, very, very, very strong. You can use the midpoint as an entry. You can use the midpoint as a directional bias. Hey, if it's below the midpoint, look to short. If it opens below the midpoint, look to short. If it opens above the midpoint, look to go long. Very, very simple, straightforward. Just using that midpoint. That's it. And you might say, well, maybe you're cherry picking something. Well, not necessarily. Let's look at and see what happens here with the AUD-JPY, the Australian yen. Well, here we go. We got the 1 hour chart. Price came down, right? Cut through that previous day's midpoint. Came back up, went down, made a low. Wick zone right here, up through it and above it. So once again, you can see here the action around the previous day's midpoint. Let's see, what did the euro do? Okay, let's find the previous day's midpoint. Daily, okay. 1 bar ago, previous day's midpoint. It came up through it. Didn't hold it. Came back down. Well, let's see. One of my traders, the USD-JPY. I like to trade this, and I like to trade the dollar Canadian because I trade mainly the New York session, and there's a lot of action on those two pairs. So you can look here and see, here's the midpoint, here's the beginning right here. Okay, so like this is a daily open. Came down, went up, but then it came down through the previous day's midpoint. You could have gone short. You could have taken the long. Maybe you took some heat. Maybe you made a profit going there. Here we go. It made a high, came tearing back down. And if for some reason you waited to get in here, there was one opportunity to take a short and it turned right around. You could have jumped in, taken a long, and another short. And so you can see here all the price action around the previous day's middle. Lots of price action there. And just to look at the dollar Canadian, probably going to see the same thing. Previous day's midpoint, action, action. So you almost have a little clue here. One other thing. It made a high, so now at the midpoint, let's look to short. It made the low, now at the midpoint, let's look to long. Something to keep in mind. So fellow traders, that's it. Hopefully maybe you learned something. I've got the midpoint in the dashboard. You see D1 with the 1 here. So you can put the threshold, set it to, 1 pip, 5 pips, so it would light up right when price is right, near or at that previous day's midpoint, so you know what the trade is. So that's it. So I will leave you now, fellow traders, because it's not what you trade, it's how you trade it. TheRumpledOne signing off.